We will stand on principle, or we will not stand at all.
Hi everyone, this is Thierry Arys Ruiz here for another episode of Principal Discord. This time we are with Anton, CEO and founder of Flowtech. Anton, thanks for being here.
Thierry, thanks very much for inviting me, and I very much look forward to a great discussion.
So it's a pleasure to be here in Zurich where your offices are. Tell us a little bit more about Flowtech in a nutshell.
Okay, so in a nutshell, what Flowtech is trying to do is actually bring the missing piece to the digital asset ecosystem. Because we all have a big vision of tokenization of assets.
Yeah.
You know, we want to tokenize both real world assets, like gold, for instance, put them on the blockchain and make them accessible to everyone. But what you kind of learn firsthand very fast, if there is no liquidity for those assets that you want to tokenize, we kind of run into problems. And that's what Flowtech is trying to address. So we are actually a technology company that provides market-making solutions to digital asset exchanges and to token issuers such as you are to create a liquid and efficient market for those tokens.
So the missing piece is Flowtech is bringing the flow, meaning the liquidity, to a market so that it can really become efficient. So we're going to talk about a lot about liquidity, one of the major problems. So let's start right into it. Here we're talking about principles most of the time. And one of the principles of an efficient market is to have liquidity. You can quickly get in, you can quickly get out, and you have a price discovery. So when it comes to liquidity building, okay, let's jump into it. The whole market is fake in crypto, right? That's one position. You have no bid and ask spread that is, even for Bitcoin, the same everywhere else. You have arbitrage opportunities or a big disparity between one exchange and the other. You have pump and dump schemes. The order book, I don't know if there's a level 1, I don't know if there's a level 2. You have spoofing, all sorts of malpractices. How do you solve that? Where are we in the maturity of the liquidity today?
So you actually correctly identified that we are at the very early stage of the digital asset ecosystem. And really a lot of the things that you mentioned now are kind of the artifacts of the fact that we're so young. So it's a very common feature or a common problem in the digital asset world that you have these malpractices, as you mentioned, that are not healthy for the development of the digital asset ecosystem, but they're present just because it's so immature. And these malpractices occurred in the digital asset ecosystem because the players who operate in this space are not well-intentioned, or they're not really operating in a regulated and compliant environment. Hence, that's a big problem, but that's also a big opportunity, because if you're a player then who operates in a regulated and compliant way, who takes out these arbitrage opportunities that you mentioned, who quotes a tight spread, who provides a deep order book across several layers, that's actually a value added to the digital asset ecosystem. And this is what Flowtech provides to the digital asset exchanges and token issues, to be that trusted player that they can rely on, that actually provides a market-making solution such that the end users benefit from all of these digital assets.
So typically the customer, right, wants to see depth of liquidity so that they can get in, they can get out. A lot of tokens are not. Bitcoin is the major one. But that I'm an institutional, and let's imagine I'm an institutional. How can I trust the price of Bitcoin? It's heavily concentrated on the top wallets. If you have one of the top wallets that were to dump it, it would create huge market fluctuations. And then a lot of people don't even trust the exchanges because of maybe there's front running, maybe there's a reading on where the stops are. I mean, that's the concern for an institutional, is where is the price discovery today?
So in the context of what you mentioned, actually this is our experience as well, that institutional investors are very educated and they ask the tough questions that you just asked. And it very much the solution that we put in place is actually to have a trusted ecosystem that composed of a custody solution that we can trust, of a banking partner that we can trust as well, a regulated and compliant exchange, and likewise then the last piece is then to have a market maker that is also regulatory compliant and can deliver that added value to the institutional client. I want to say that this kind of ecosystem is already in place, and you might have actually, I'm sure you have read it, but for the viewers who have not read it, actually, that there's a big trend now of allocating small part of a treasury in Bitcoin, actually.
That's
and
right.
For instance, Square, this is a famous Silicon Valley tech startup that actually allocated not a huge part of the treasury, but actually a small part of the treasury into Bitcoin. And they explained in a white paper, a very short white paper, but a one-pager, they explain how they did it. And there was a key player then they mentioned there, what was the liquidity providers. They said we actually gave the execution orders to a liquidity provider who had a trusted ecosystem around them such that they got those Bitcoins in a very safe, compliant and secure way. And it was very interesting. They said it was all done within 1 day. It was all done fully automated and computerized, that they got their Bitcoins through a trusted ecosystem.
Yeah, I mean, it's funny you mentioned treasury because I'm talking to a lot of corporate players, and the first thing I tell them is to put an allocation of the treasury in gold. Why gold? Because let's take gold. It's also a more efficient market. There's a price discovery on the secondary market. It's a more mature market if you compare the two. It's very clear to see the differences in pricing, if any, and so on. But it is true that it is a perfect timing right now when it comes to digital assets, Bitcoin or else, to be diversified. But then when you look for a store of value, you don't know what's going to happen to the dollar, to the euro, but most likely given the money printing, if inflation kicks in, well, you pretty much know what's going to happen, right? It's going to go down. And Bitcoin, shortage of supply, I'm not a big believer in Bitcoin because of precisely the liquidity issue, the market infrastructure issue, and I think it's just outdated, but I'm a big believer in gold. All in all, for a portfolio, it makes sense to have a little bit of everything so that you can hedge. Now, going back to the principles of a market, so you said correctly, any distortion of the market can also be an opportunity, and that's why I'm very interested in what Flowtech does, because not only you are taking advantage of that opportunity, but by doing so, you're basically solving the problem of the liquidity. So I understand you got it pretty much put together in terms of regulations. We're in Switzerland here, so it's a pretty trusted environment as well. What is the main question your clients ask you?
So it turns out our clients are actually very well educated about the markets.
Right.
So they actually I'm actually very much surprised many times how much our clients go into the depth of the algorithms.
Right.
They're really curious how the algorithms work because they actually pose the same questions like you are. How is the price stability, liquidity, and the low volatility is going to be ensured actually if you deploy your solution? And they also ask a question around if they're quoted on several exchanges, how the arbitrage opportunities are going to be taken out, how fast that takes, how do they benefit from being when those arbitrage opportunities being taken out. And there's a greater awareness at the moment is that they want to work with the trusted players. And
how do you ensure best execution?
So this is actually, this is the experience that Flowtech has. When you take a look at our team, we have more than decades and decades of experience working in the market making industry, both in the traditional finance, meaning the market making firms and the banks.
So you were already a market maker before.
Yeah, exactly. So we really have a lot and excess experience at Flowtech of building what's called a market making infrastructure, which composes of the following. It's something called a low latency trading system, algorithms. So the low latency trading system, it's the core that runs everything. Then you have the algorithms that quote. You have integrated portfolio and risk management system, because this is make sure that everything is in check. You have the connectivity to the exchange. And the last two pieces are secure data storage, because everything that happens, you need to store it in a secure way. And finally, reporting to the client, because the client says, show me that you delivered the goals.
So one of the big problems, I'm a client, is that how do you manage the risk? I mean, the clients want to have the reporting, right? Yeah. So they want to have the custody of the assets. Yeah. Do they also want to see the risk, the expected shortfall, the value at risk?
So our clients are quite educated, but not as educated as you are, definitely. So they are not aware of a lot of these risk measures, and they actually, when we proposed to report it to them, they didn't see a lot of added value. So they're very much concerned about what's happening with the assets. How are
I mean, you do it internally, right?
Internally, we of course because we have to, even though if the client doesn't ask it, we still have to put checks and balances in place, and we also monitor it on a continuous 24/7 basis. But the clients, when we try to actually propose it to them, that we educate them what is value at risk, how does it impact actually them, there was not enough appetite at the moment. So we're going to try to educate them more, but when the time comes, we'll report it.
Okay, so but 24/7 non-stop. That's a big burden. How do you manage that?
So that burden can only be revealed actually if you have stable, robust, and secure infrastructure.
Right.
That's also actually backed up by a second infrastructure that's running all the time that can actually take over if something goes down. Okay. So we actually, the way that FlowTech's market making solution works is that two run at the same time. One is actually quoting, deploying liquidity, but the other one is always on a standby in a different data center somewhere on the globe. So if this one goes down, the second infrastructure picks up everything immediately.
Okay.
And we also have continuous real-time reporting, where sometimes if something happens, you actually get notified. Even that means on my phone, I would get a notification where it says,
start screaming.
It says certain things are out of the expected range.
Right.
Can you please? Then there's a human intervention. So we have very robust, secure, and strict checks on a software level. But then there is always a level of risk management where certain things go out, the parameters of certain risk measurements go outside of the certain range. Then a person is notified, and a person then picks up. And that means actually something called the risk committee.
How do you sleep at night?
Very tough, actually. So that literally means that we could be the risk committee. Sorry, the people in charge of the risk could then be woken up, and then they would have to wake up the risk committee, and the risk committee then makes decisions that actually have to resolve this problem.
Right. So let's step back a little bit for the people who are not that into the geeky part of it, but let's speak about principles already. Okay, I'm gonna do the devil's advocate. Yeah. Bitcoin is not backed by anything. It's all fairy dust. Yeah. I can't put my finger on it. And it's extremely concentrated. Tomorrow, the Satoshi Nakamoto, whoever he is, wakes up and exits scams. Yeah. All right. What happens? I mean, how can you deal with that intervention?
Yeah, so I mean, these are really, the tough questions around cryptocurrencies, digital assets, because they are, to be transparent, it's still an unproven and young industry, meaning it doesn't have the track record like gold has. So gold, he really has thousands of years of track record, and that's why people trust it. Right. And that's why they allocate maybe more than a small part of their treasury towards gold.
Well, they should.
And they should, But so now Bitcoin is emerging kind of as an alternative, but it's very unproven. Right. And it has the challenges that you mentioned, and these challenges are trying to be addressed, but it's a matter of fact, the digital asset world is barely 10 years old, unlike the gold industry, which is thousands of years old.
So do you see Bitcoin as money, or do you see Bitcoin as an alternative investment for speculation purposes?
I see it more on the second part, that it's actually, at the moment, still a very much speculative investment.
Right.
It has certain characteristics of a store of value, but it has also the challenges that you mentioned. Yeah. So I think at the moment, some people see it as a store of value, but not much. This is my discussions. A lot of people see it as a means of speculation, and that's the majority of the digital asset world. So if you ask, your friends, why did they buy you Bitcoin? They will not give you a strict argument.
It's because they want to get rich quick.
Yeah, quick.
I was speaking to an art dealer, and I told him, look, I think Bitcoin is pretty much a collectible, because pricing is almost same as OTC for big players. It's limited, right, in quantity. But it's very volatile, so you can change prices. And I think, I'm looking 10 years from now, and I say, like in the words of Peter Schiff, right? It's never the first car, the best car. It's never the first computer, the best computer. It might not be the first cryptocurrency, the best cryptocurrency. And then, it doesn't mean that that cars are bad, or that computers are bad, or cryptocurrencies are bad. But what are the chances that the Bitcoin is going to stay? So a lot of people talk about layer 2, but what is what comes to your mind when you hear this?
So I think that the reason why Bitcoin has had such success so far in the digital asset world is because it didn't have real competition. Competition of Bitcoin is maybe Ethereum and so on, if you kind of think about it like as a digital asset. But what happens when you have all the gold on the blockchain? What happens when you have all the shares?
Well, that's my goal, yeah. But
but if you think about it, if all the gold is digitized and on the blockchain, then Bitcoin is competing against gold. And that's a lot tougher competition than when you're competing against cryptocurrency like a Litecoin.
Right.
So I think that the Bitcoin's success is very impressive. And I will be even more impressed once the real competition comes in, and then try to compete against gold, against shares of Amazon, against shares of Google.
It's already kind of doing it with Tether, and you see the US dollar is taking a lot of size in the market. So I think it's a great timing for me then. What do you think is the biggest challenge in the 5 years to come as the market matures when it comes to market infrastructure? Because today, I don't like regulation, but I think the market needs to be regulated in a voluntarist way, meaning for the purpose of a better world for everybody, right? We might not have a self-regulated kind of organism where you see, we need to establish some rules where you see what the key word here is price discovery. What does that mean? Well, we need to be able to discover the price of the asset in a fair way for everybody at the same time. Does that happen today?
So if I have to say, in terms of long-term challenges, and I think you really touched upon something very important, which is regulation. And I think the biggest challenge will actually be once you understand that digital assets are accessible to everyone globally, how does the regulation in Switzerland align with the regulation in Singapore, align with the regulation in China? And that will be actually a big problem because there's not a lot of understanding around that. If you want to make it succeed, right? We want to make this big, right? It has to be regulated, but what happens if you have 100 different regulations? Then it will never, it's too fragmented.
Well, that's one, but I'm speaking to crypto punks and they all say, we're anarchists, okay? And then they don't want any of that, right? BitMEX or the rest of it. I'm still telling them, look, anarchy, first of all, anarchy doesn't mean no rules, it means no rulers. But for the sake of a better world, you need to have the rules of the game, right? The problem today, even in the real financial markets, is that the rules change. The Federal Reserve has some rules, then they change. Now they're buying assets. So a lot of the rhetoric is, hold on a minute. Well, ask the same question about Bitcoin in the secondary market, in the traditional market. Is there real price discovery on bonds? No, there's none, because the Fed is intervening. Is there a price discovery now in the S&P? Well, maybe not, because the Japanese central bank, the Swiss National Bank, is buying them. So don't you think the problem also comes from the secondary market, that we're basically shattering those principles as well?
I agree with you, and I think we're shattering the fundamental value of these assets because they're not reflected,
Right.
Because if you have a situation where more money is printed in March and April in May than in the whole history, I'm referring to particular central banks, then you have to wonder, how does this reflect in the pricing? It reflects very poorly. And it's very funny that we are very close to our national bank here, but they're according to my knowledge, they're the largest shareholder of some of the biggest social network startups globally. And you also then have to wonder, where is that really the role of a monetary institution? I think it's not, and I think you agree that it's not, and then distortions happen.
Well, they're basically acting like hedge funds,
Exactly,
right?
yes.
So I don't think that's within the mandate. I mean, it would be funny to try to pinpoint where in the book it says that. Anton, tell us a little bit, what's your message for the public?
Yeah. So my message, and also to our viewers, is I think that we are in front of an amazing opportunity. Blockchain will really completely reshape the financial world as we know it. There's going to be a lot of winners there, and there's going to be winners both for real world assets like gold. There's going to be winners among the virtual or digital assets, and overall I'm extremely positive and extremely optimistic, and all the ups and downs that we go through in the real world is just, you know, part of the journey, and I'm very excited for everything that's coming.
What are the principles that Flowtech has as a culture value in the company?
The principle is always transparency. We're a trusted partner. You can rely on us, and we do things by the book.
Great. Well, thanks for being here, and thanks for having me. Pleasure. As well. I hope we're going to discuss another time, probably. This was a great discussion, and I hope that our viewers also appreciated this talk. If you like what you saw, then just subscribe, hit the bell button, and follow us and follow Flowtech as well on social media. And I hope to see you soon. Bye-bye.
We will stand on principle, or we will not stand at all.